Hello everyone, my name is Siabonga, Forex Lover. By now you should know it. The reason I'm calling myself Forex Lover is because I love Forex, and the reason for loving Forex so much is because Forex is the only business that has got the power to set myself free and the life of my family free from poverty. I can say from poverty, I can say it will set me free by meaning financial free, which is having a financial freedom. Okay, enough about myself. I'd like to welcome everyone back to my channel. Hopefully that if you are new in this channel, you will subscribe. Hopefully you will like, you will comment, you will share, and you will be interactive. You will be at least active, doing something rather than just watching for 2 minutes and then skip and look for a different YouTube video. Hopefully that this video will provide you with all the value that you need. Basically, without further wasting of your time, today's topic will be a very important topic in the forex market. I would like to name it as currency correlation, or importance of currency correlation. Okay, so it comes down to a definition of what is a currency correlation in forex. Okay, before we go to that, we'll go to that to a precise definition of currency correlation. So I'd like to brief you about why it's currency correlation is very important in forex. Okay, when I started out trading, I struggled a lot with currency correlation, because I remember I used to buy gold and buy USDJPY at the same time, and you'll find out once you do that, the first thing first, you have already exposed your account in too much risk, because those pairs are obviously negatively correlated. So in other words, you can't buy both of them. So if you are going to make a decision of buying a gold, make sure that you are selling USDJPY. So in other words, not to say that you can't buy gold and buy USDJPY, but you can do that, but you must know what you are doing, and you must be experienced, an experienced trader if you are going to do that. So another thing is when you buy EURUSD and buy USDJPY and buy USDCHF, so you already like exposing yourself. You already shouldn't be doing that. So in this video I will explain to you why you shouldn't be doing that, what you should do instead, and also I will show you like on different time frames, the 1 hour, the 4 hour, and the daily, on different pairs, on what to do, what to expect, on how to trade it, how to put it in your strategy, how to incorporate it, because you don't have to use my strategy, or you can use your own strategy, whether you are using a system which is an indicator, whether you are using whatever system you are using in the world. So you must be mindful of currency correlation. So right now let's dive to the definition of correlation. Okay, what is correlation in forex? That's what I just typed on Google. So the result is the result of my search is a currency correlation in forex is a positive or negative relationship between two separate currency pairs. So in order for correlation to exist in the forex markets, you must have at least two separate currency pairs, whether you are going to have EURUSD and USDJPY. So both of these pairs, obviously they have correlation in them, whether they're both correlated together or they are correlated with other pairs in the forex market. So there are two types of correlation. It's a positive correlation and a negative correlation. And the first one, positive correlation, means that two pairs move in the same direction, or move in the same manner, or move in the same have the same characteristics. Okay, and one is negative correlation, means that those two pairs, not one pair, remember, two pairs move in the opposite direction. An example of a positively correlated pair will be USDCHF and USDCAD. That is an example of a positively correlated pairs. Obviously correlation is something that change from time to time, from time frame to time frame. So you'll find that today USDCHF and USDCAD are both positive correlated today, meaning that they are moving together today, but tomorrow or a day after tomorrow you'll find that they are no longer really moving together. Maybe one is lagging behind the other, but you'll get what I mean. Don't worry about that. An example of a negative correlated pair mean gold and USDJPY. What I mean by that, gold, if gold is going up, definitely USDJPY has a high probability of going down. That's an example of a negative correlation. So now let's dive to the charts, and I will show you how exactly can you trade this correlation. It doesn't matter what strategy you are using. Remember, you don't have to use my strategy, but I'll use according to the confluences that I use in the forex market. Okay. So let's say you are a supply and demand trader like myself. Like now I've identified this as a supply. This is a supply to me. It meets all the requirements and everything of being a supply zone. So if I am considering to sell here, on this pair, at least, I will repeat, at least if I'm considering to sell this supply zone, I must look at least at 2 more euro pairs. Meaning I must look at least 2 pairs that have a euro as a base currency. If both of these 2 currencies are exactly at the same supply area, then I stand a chance. And I will tell you another mistake that you are not allowed to do when you are trading or when you are taking currency correlation into perspective. So here is my currency crosses. So if I want to trade Euro USD, at least EURUSD, EURUJPY, EURUSD is what I'm supposed to look at. So I have EURUSD. Okay, so on this EURUSD, let me see if I can find a clear supply zone. On this pair, I won't lie, there's no clear supply, because I can see that this pair is in a range. So we can say that this is a support. We can say that this is a support. By the way, this is a support, and then we'll say that this is a resistance. So currently buying there is not a good idea. Because I see a range here on EURUSDCHF. Let us have a look at a different pair, which is EURUSD or EURUJPY, and see if selling there is a good idea. So let's definitely look for, let's see EURUJPY. So EURUJPY, here there's a supply, but this supply is not strong as I would want it to be. It's a very weak supply, and if you want to, I can't discuss right now why this is a very weak supply. So for me to sell here, I would never sell this supply zone. Also, if I may put also this trend line, is already broken the trend line, so I wouldn't look to sell here on euro. So let's look for the last chart on euro currency pairs, euro AUD. Let's see. Remember, we're looking on the 1 hour. So this one is the one that is giving me at least, some hope. So another thing is, I have looked at Euro USD, EURUSDCHF, EURUJPY, and Euro AUD. So at least Euro AUD is at least agreeing with Euro USD. So like you see now, at least I have 2 pairs that agree with each other. So I wouldn't just sell now. What I would do, I would instead look at USDCHF. Okay, what I want to see, if USDCHF is at a demand, level at a clear demand, and also I'll look at USDCAD. If it's at a demand, then I'll definitely look definitely take that trade. But if not, then I'll move on to the next currency pair. Let's look for USDCHF. Or first, we can take this one. See, this one is not at a demand. This is a demand, yeah, by the way. It's already reversed from a demand. Already went up, down, and reversed at a demand. So right now it can either come down again for a continuation up. So in other words, this one still has a potential of going up. You see? So now I wouldn't sell there. You see, because now if this one candle, two candle, three, four candles was not there, formed yet. Let's pretend that those candles were not formed yet. Then at least I was gonna take that one with confidence. But let us look at a different pair. Let us look at a different pair, which is USD. Yeah, let's check USDCAD. I don't know if I've checked this one. This one is doing a V-shaped pullback. Not good at all. So this one is a demand zone. Yes, there is this. Yes, this is a demand zone, but this is not how I would like the pair to reverse. So I wouldn't like it to go up and reverse down and buy. So even though it is at a slightly demand, so I wouldn't buy. So I would leave Euro USD. I wouldn't sell Euro USD. That's what I want to say. I wouldn't sell Euro USD. So now let's do AUD pairs. Let's do AUD pairs, and let's see if let's do the 4 hour. We'll do the 4 hour chart and see what we can do. Can we be buying or can we be selling? At least I want you to get an idea on what to do. Let's take AUD USD. I want us to start with AUD USD, then we can go to any USD like AUD pair. You see, AUD USD, I can already see like tight consolidation. I can see a tight consolidation. Let me even I can even use this one. So I already see a tight consolidation. So in other words, here the only thing I can see here is that this pair is in an upward momentum. So meaning if it break above, maybe I will buy, or break above and pull back, I will buy. So let's look at the other AUD pairs. Do they agree with this direction of buying this pair? You see, let's look at AUDCAD. Same thing, consolidation, but now it's a different variation of a consolidation. But remember, the other one wanted me to break above and buy. So this one is a reversal type of a consolidation. So this type of consolidation is the one that usually, because this one the buyers were in total control up, but now the buyers are losing the strength now here in this region. So definitely this one is saying sell. Remember, the other one is saying buy. So let us look at two more, and then we are finished with this chart. Let's look at AUDCHF, then we're gonna go to AUDJPY. So remember that the other one is saying sell, the other one is saying buy. So this one definitely in this range. This one is saying maybe this one is in line with buying. See, since we can see that there is impulsive move to the upside. So now, right now, if it break above, then it agree with buying. So two more are agreeing. At least let's look at the last one. If the last one agree to buy, then we can look to buy this one. So right now this one do agree with buying, so we'll definitely draw our thing there. Maybe draw our trend line there. The moment this is how you can use correlation. Don't just buy and sell anywhere. Like wait for it to break, retest for a continuation. So this is how you use currency correlation. So now Let us look at the last pair. Let's just look at GBP pairs. What can we expect on GBP pairs? Let's start with GBP. We're gonna go to the daily. Remember I said we do the 1 hour, the 4 hour, and the daily. So here I can see already it's at a supply. So now definitely the daily is saying something about sell on the GBP, and I agree with this sell. Then let's look at another GBP pair. Let's go for GBPJPY. This one is definitely not at a supply. Is it? Yeah, definitely at a supply also. This one is screaming sell. This one is screaming sell. But I won't go into details like the way you put your stop loss, what is the all other confluences and so on and so forth. So I'm just trying to show you the importance of currency correlation. So let's look for other two more GBP pairs. Then let's do GBPCAD. So this one is almost too much consolidation, but at least the consolidation is happening around the highs. So at least it's around the resistance number 1, resistance number 2, resistance number 3, resistance number 4. Forgive my drawing. Okay, at least you get my idea. So now, yes, I do expect a push. So selling a GBP pairs is a very good idea according to this correlation. Let's look at the other one. You see, three of them never even disagreed with each other. So now let's look at GBPCHF. See, this one is even at a very nice high. If you were using this currency correlation, we are supposed to sell somewhere there, and yeah, so GB pairs are very good to sell. Obviously, you would go to the 4 hour or even 30 minutes and look for a sell there. Look for a sell there. Look for a sell there. You can do something like you can even use a Fibonacci, drag it there. Once the pullback happen and pull back somewhere around 50% or 61.8, so you can only, like always, buy low and sell high. You can't sell here. You can sell here, there. Not saying you can't sell there, but I can see a demand zone. So you'll be selling into a demand zone. It will reverse against you, then continue in your direction. So there's a lot of homework that you have to do in your trading. So also, if you thinking of buying a GBP pair, don't buy GBP pair, like don't buy GBPCHF and sell GBPCAD. No. Don't buy GBPJPY and sell GBP audio. So, or GBP NZD. Like if you are buying GBP, buy GBP. If you are selling euro, sell euro pairs. If you are buying euro pairs, buy euro pairs, and so on and so forth. Also, if you already have one position on GBPCHF, don't you can do 0.01 on GBPCHF and do another 0.01 on GBPCAD. Like depending on your account size, you can do 0.05 and 0.05. Like you can split your risk in half from just using a very big lot size. Split your risk when you are dealing with currency correlation. Also, do your research. There are so many websites that you can use to check currency correlation. There are apps now on Google Play stores. Some of them are paid, some of them are free. There are those websites that I won't mention. So if comment below if you want the list of those apps and the list of those websites that you can use to check this currency correlation. And maybe if you need an indicator, I can organize you an indicator that does show you currency strength, whether the euro pairs is going up or the USD pair is going down. So also it differs on a time frame and so on and so forth. So hopefully I've earned your like, your subscription, and I would like to thank everyone that are supporting me in watching those videos. And take care of yourself. I will see you in the next time I release another video. Stay blessed, everyone. Have a lovely and a beautiful trading. Cheers, guys.